Hello investors, welcome back to the channel. For today's video, I'll be giving you a quick portfolio update, but most importantly, I'm going to focus on how to buy stocks whenever the market is red. I'm going to show you how the opportunity is one of the best opportunity when you're trying to grow a small account portfolio. For those of you new here, my name is Tim. Welcome. I am that guy that started off this portfolio with only $65. The reason why I went ahead and do that is I want to show people that it does not matter what amount of money you have, there's literally no excuse for you to go ahead and start investing today. Now, I went ahead and started off with $65 because that's what I had at this time. But even if you have $1, if you have $5, you could go ahead and start investing. Every single brokerage out there, it allows you to start with minimal amount of money, even the legacy brokerages that we had from before, by using what's called as fractional shares. You could purchase some of your favorite stocks over and over again. Now, with my initial $65 investment in this portfolio to get started, I went ahead and make myself a promise to add $250 every single month in order to contribute to grow this portfolio even faster. And I have been doing that so far. The next amount of money that's going to be added is going to be next week's video. So if you have not already, now would be a good time for you to go ahead, like the video and subscribe to the channel. So far, this account has been open for roughly 3 months and we're up a bit. Not much, we're up a bit. The reason why we're up is because of the strategies that I chose to employ, and I'm going to go ahead and show you that. So for those of you new here, this is just cryptocurrencies that I got via Robinhood. There was some kind of program which they gave us some free crypto. Now, what I did with my $65 is I went ahead and I invested it into 10 stocks only because I want to make a very concentrated portfolio. And I want to show you, you don't need hundreds of stocks in your portfolio. I went ahead and divided my portfolio into just 10 stocks, three categories. Category number one is going to be my value plays, and it's going to be Amazon, Microsoft, Meta, and Google. These are value plays because these are well established companies and they're not going to give you some really wide exponential growth, but they're going to be going up in value as time progresses. So they're going to be able to keep the portfolio stable while still growing slowly but over time. The next set of stocks I have in the portfolio is going to be Altria, Pepsi, Realty Income, and CVX. This category is the dividend investing category of the portfolio. The main goal of these four stocks here is to give me a check every single month or every single quarter because they are what's known as dividend payers. Now, what dividend payer does is that the amount of money you invest in it, it pays off a yield. So you get that yield in your portfolio, depends on how often it's paying. This one pays every month and the rest of them pays every quarter. Hence, I get a check every month and also every quarter. Now, the focus of today's video is going to be the last two stocks in the portfolio, which I have here, which is going to be growth stocks. The first four stock represents value stocks, which is going to give me a bit of growth over time. The second four stocks is going to be the dividend pays, which pays a check on a consistent basis. And the last two stocks here is going to be here primarily for growth. And this is where I want to focus today's video. So let's go ahead and open up the first one, which is OSCR, and that's going to be Oscar Health. Now, the reason why I want to use these two stocks for today's video is I want to show you Oscar Health has had a very strong downturn over the last couple of days. So what I did, I used some of the money that I had reserved as my cash reserves. I went ahead and purchased even more of Oscar shares. The whole point of that is that most people were incentivized to buy whenever the market is green or whenever stocks are going up. That can be done, but you find the majority of the value when you get these good stocks at a very low price. You get way more value that way. So with Oscar Health, my new total is going to be 38.65. That's the complete worth in the portfolio, and my average cost is $14.13, which is the most important thing for today's video. When I first invested in Oscar Health, when I started off this channel, my average cost here was around $15. Because the share price dropped down, I went ahead and bought even more, and what that did, it lowered my average cost. So now I have a stock that I want to own in my portfolio at an even lower price. What that also does is that Because I'm able to lower my average cost, it's a lot easier for me to see a profit whenever the share price begins to go up. Because now the share price just needs to go up above 14.13 and I'm going to be in the green, as opposed to when I just invested in it initially, it was $15 and the current share price right now is 13.65. It's a lot easier to go to 14.13 than it is to go to above $15. Hence, I went ahead when I saw the drop, I went ahead and buy more. Now, I don't just go ahead and buy more whenever it drops. It has to be a 5% or more drop in order for me to be interested in buying more. Now, Oscar Health is relatively a small part of the portfolio. As you can see here, it's just 7% of the portfolio and just around 2 shares. Now, as usual, I did go ahead and show you how I always like to go ahead and have set it and forget it portfolios, meaning I just want to just keep reinvesting into the portfolio. So my current investment right here for Oscar Health is $10, meaning every month, whenever the $250 comes to the portfolio, $10 worth of that is going to be going towards buying Oscar Health. So that's it for Oscar Health. That is one of the changes I made for this week because of the downturn. The other stock I have in the portfolio for growth is going to be New Holdings. And I went ahead and I bought more new because it too had a severe downturn. The reason why it had the severe downturn is because it had earnings release this week. Because of the earnings release, the stock price dropped sharply. If I go over to the 1 week mark, I could show you right here. So here you could see the share price was at 17.52 and right now it's at almost $15. So that's a real drastic drop. Because that represents a more than a 5% drop, I went ahead and I bought even more. Once again, whenever you are investing, the first thing you need to do, always make sure you invest in stocks you don't mind owning in your portfolio. Make sure to go ahead and do your own due diligence. And once you have a strong thesis and you have high conviction of the stock, then you should go ahead and execute. If the current price that you buy the stock at is going at a lower price, then you should not feel afraid to purchase more because once again, you already did your own due diligence and you know you invested in something good. So the total market value for New Holdings is going to be 36.10. My average cost is at 16.60. So New Holdings, again, when I went ahead and bought, it was around $17, I believe, for my average cost. By adding more to the portfolio, I have reduced my average cost once again. The other point I want to make for today's video is that whenever you see a stock that you like, it does not matter what price it's trading at. You need to go ahead and buy it. The best way to buy it is by using the DCA method, or what's known as the dollar cost average method. With the DCA method, it simply means that you're going to be allocating a certain amount of money to purchasing that stock and growing the portfolio over a consistent period of time by using the same amount of money. So for instance, every month, I'm committed to buy $10 worth of New Holdings in the portfolio, despite what the price is. After a while, what it's going to do is going to give you an average cost. So even if you buy it at $19 and it drops down to $14, you still keep buying, and the cost is going to average out over time. Now, with New Holdings, with all the other stocks I have in my portfolio, I always like to do recurring investments so I don't have to think about it. So, whenever the money comes to the portfolio, once again, $10 of the money is going to go towards New Holdings, despite what the price is going to be. New Holdings is one of those stocks which is a very small part of my portfolio with only a 7% representation in my portfolio. So, let's go ahead and get back to the home screen for me to round up today's video. Okay, so the whole point of today's video is to show you guys the market has short-term noise, meaning there's going to be lots of things going on. Right now, we have war, we have interest rates, we have all kind of stuff. That is only short-term noise. Always try your best to shut out the short-term noise. I know it's hard, but try to shut out the short-term noise. Whenever you shut out the short-term noise, then you could actually see further along in front of you. Whenever you're investing, always invest for a longer time frame. For me, for instance, I don't want to keep any stock in my portfolio that I don't see myself keeping in the portfolio for more than 5 years. Once that's your thesis, then you go ahead and you do the DCA model, which is dollar cost averaging, after doing your own due diligence, of course, and I guarantee you the results are gonna be in your favor. Now, the whole point of me going ahead and do this video is because I want to show you it does not matter what amount of money you have. The best thing is to go ahead and get started today. Get started today and you will see the results 5, 10 years from now. I'm going to go ahead and do everything that I possibly can to give you as much information in order for you to continue to go ahead and keep pushing your investments.